following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Took a small break yesterday from some, I think it was some bad bee fight, but also was recovering from the Manny fight over here. Ooh, I was a judge, I would have given it to him. Forced the action. Seemed to be on top of things most of the fight. Just bad decision, in my opinion. Let's take a look at the Japanese yen really quick. This is one of the instruments that we talked about that were showing the, constant strength, fundamental reasons to be long. And this is, again, why we don't want to short the Japanese. We found support. We're starting to break out on the dailies again. On the weeklies, we're looking at targets again of 121 up top. And we also looked at this as a prime candidate from the long side because of that dollar relative strength. These things usually trade somewhat tandem. And we actually looked at that relationship. We're able to kind of discern that, this was kind of showing a tan a little bit early. And the Japanese yen, as we've talked about, 140 is not out of the question on this long term. But as we look at this now, we've got support at 119.69. And that's the way we're looking at the yen. So, again, pretty good long candidate. I'm going to take a look at our 240s really quick. As you can see, after we broke out, we looked at the shorter-term inflection points to try to regulate the trade. The first short-term support, 120. As we look at that, rattling around above that, and then we had that 119.67, 68, 69 on the dailies coupled with 119. Let me restate that number so I don't get it wrong. 119.69 coupled with this 119.62. That little EMC down below, that was kind of your big support, but you've got short-term support that we rattled around for about a day and a half above 120. So again, that's what these levels are really extremely beneficial for. And we've got some guys working behind me that are doing some work here tonight. So we're going to just, please excuse the motions in the background. All right, so let's take a look at the dollar as we look at these instruments related to the dollar. We're going to look at a couple of currencies here. We talked about waiting patiently until after we broke the original support on the daily infra lows. So we got in these weekly infra lows on the dollar around 95.50, let's call it. We didn't quite get a close below there last week. We dipped down and just closed right on the borderline there. But I don't like the way this dollar is acting, to be honest with you. It's looking still a little bit heavy. It's kind of doing a sympathy bounce here. And the really telltale sign for this in my book is we had a profile appear above price action. So as we had yesterday's price action happen and close there, we came up and kissed this unfair low on the dailies right there. So the highs were 96.09, 96.10, and those unfair lows are 96.14. So as we see these profiles appearing above, in general, that's relatively bearish action. And as we look at this, we're taking this as somewhat bearish connotations, even though we've cleared and gotten back above that weekly unfair low. I'm looking at this as somewhat of a bear sign and to trade breakouts below those weekly unfair lows now. And that would be below 95.46. So that's the situation on the dollar. What we're going to do now is migrate down into the Australian dollar. Had some news come out on this today. Cut rates. Here we go. 79, 18, 19. Came up and hit that, bounced off. In my opinion, this is going to continue to head south still. Here's the situation on the weekly. Last week, got back above, closed below, came back and retested some levels. I'm looking at this to retest 76.93. So where do you put your stops on this type of trade? In my opinion, you've got to place stops. Let me get this over here so we can see it. Above 79.19. Stops above there and let this thing drift down. First point of contention for this on the downside is going to be 77.22 on the Australian dollar. Okay, we're going to take one more currency up for view here, the Canadian dollar. This is one I've been paying attention to because, you know, pretty serious violent action that happened on this. We came down, did a little bit of a sympathy bounce, and last week we caved in below. Now we're kind of rattling around above. This is, in my opinion, a little bit non-directional. The bounce is still there, but it looks a little heavy here. 120.58 is going to be the big number there to stay above, but I'm looking for this to head a little bit lower. And here's the daily situation. Getting clean and clear of 119.8, which is basically that 120 plus 20 ticks, is going to be a very bearish sign for this, especially on a weekly close, which we haven't had a weekly close below that weekly unfair high inflection point. All right, let's take a look at the S&Ps. This is something, we had a little bit of mixed signals on the breadth here, and I'm still not a big fan of going long the S&Ps, but look where we came down to. We talked about a target area around 2068, 2069. Last week we hit this 2070. I didn't think we were going to bounce this hard. I thought we were going to bounce a little bit, be able to find some more inflection points to short off of this. But, you know, here's the daily. We never had a new profile up here. We met some targets below in the interim, and what do you do now? So I'm going to pull up our scanner really quick. I'm going to pull up our S&P 500 breadth. I'm going to pull this up. Look at our breadth. Still not very positive on the dailies. 240s and the 60s obviously are reacting to short-term movements up in this index, but the dailies are really, again, it's you know, where are the odds? I don't know if the odds are in your favor with this trade on the north side. Here's the 240s. The short-term inflection points, again, 2113 down below 2103. What do you do with this now? Again, I'm not a big fan of going long this. We're still looking for inflection points on the intermediate to possibly short this, and right now we don't have anything to hang on to. We met target below, again, recap, and now we're just looking for daily inflection points to pay attention to on the S&P 500 June contract. Excuse me. Let's take a look at some NASDAQ numbers really quick. Here we go. We do have inflection points to kind of trigger off of on the NASDAQ, 4462, 4463. What do you do with this? Again, the NASDAQ's been a little bit stronger component, but in my opinion, I think anytime we can get below, especially a daily close below that area, 4462, it may be time to look at this from the short side also, and hopefully the S&Ps will hopefully drift down and gives this thing some help in general. Let's take a look at the DAX. Okay, here we go. Finally getting data. All right, so this is the situation on the DAX, 11,430 down below. We met that. We're drifting a little bit higher. That was the weekly unfair lows. As you can see there, that's the stronger. You remember, we took weekly's precedence over daily, over 240, over 60 down the line. We took a bearish connotation on this because this 12,123 inflection point, this profile appearing above, just like the dollar, having those profiles appear above is very bearish. And as we look at this, now we're looking for new inflection points to appear on the DAX to hopefully get short this again. We don't have any of those right now, so we met those weekly unfair low targets. Now we're just looking for some more inflection points to pay attention to on the DAX. Excuse me, guys, my voice is still off from yesterday here. Going down the usual suspect list, let's take a look at gold. Gold's been a little tough to trade. We caught a good bounce off of this into that 12.15 area. Might need some water in a second here. We're drifting a little bit higher here. I'm not exactly that excited about trading gold from the long side right now. I know we closed below. We went back and kind of resurfaced back in the fair auction. But some of our automated systems are saying that this might not be the ripest opportunity long side. So we're waiting patiently. Thanks very much. We're waiting patiently to see if we can gravitate a little bit lower here and get below 1182, 1183 to kind of get some leverage on this gold. We're going to take a look at crude oil June contract. Again, trying to get the usual suspects out of the way before we get a break here. We've had kind of zero reasons to short crude oil lately. This is the daily profiles as we continue to go higher, rattled around above there, and now we're eclipsing this daily unfair high now. We're trading in the 60 range. That was our targets before. Nothing up here. Again, not the time, in my opinion, to look at this from the short side yet. Here's the 240s. We looked at these, buying these inflection points on the daily, kind of ignoring the 240s on the way up. Now we're making new near-term highs. And again, I don't think you can start shorting this at all until we get below 58, 72, 59, that range. So we're not anywhere near there right now. And don't try to be a hero and short this, is my outlook on it. Let's take a look at copper. This May contract, somebody put this on my radar screen, and I'm so happy they did. We talked about trading this off the weekly unfair highs, and we got above the, let's see if I can pull this back up here. This is the reason we took a look at this. Again, rattling around above, consolidating above that 268.33 area. And then we had this daily unfair high around the 273 area. So when we started clearing all that, it was okay to get back in the water on the long side. And this has proven to be a pretty good trade here. And whoever mentioned this, I can't remember who it was. That was a really good call. And I hope we can provide some sanity where to stop some trades like that in the future. Excuse me. Okay, so one more usual suspect we want to look at. We got about 5 seconds here. We're going to cover this a little bit farther into the next break, after the next break. But we're going to take a look at the 10-year. And we'll be right back.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. We're looking at the 30-year. While we're referencing the 10-year, I just want to show you this. This is our weekly profiles here. This is technical damage to say the least. 158.14. Again, this is the June contract. We closed below. Went back and retested this week. Again, not taking long this right now on the 30-year. If you are to show, you know I've been pretty out on treasuries for a long time. Come on, guys. My charts are a little slow. Sorry about this. 10 years still hanging in there. Got those weekly info lows at 127.11. But here's the intermediate trade. Had that breakdown. This is kind of what I was banking on, was maybe a bounce off the 128.31, 32. Rounded off, that's 129. Again, there's not a lot to hang on to on the intermediate or long term when we start getting below these daily profiles, and then we're kind of waiting for the next top down, which is this weekly 127.11. Excuse me. Obviously, this is a little bit stronger than the 30-year, but this is kind of where we're at. We've reached a low this week of 127.17, so we've gotten really close to that inflection point. But this is kind of Custer's last stance for a while on the 10-year. So just pay attention to that big number. This was something, again, you try levels. We try that 129 area. If that doesn't work, we wait for the next one. Taking a step back, I mean, the team's still, in my opinion, still kind of churning around and not, completely breaking down on a trend mode below profiles. We're just keeping our eye on this. Not a big fan of going short these treasuries, as you know. So that's kind of the way I'm looking at the U.S. treasuries. Just amazing. I was reading some stuff about Bill Gross talking about treasuries today, actually this weekend. When I was suffering yesterday, I couldn't read anything. But, when you moved to Vanguard, the PIMCO Vanguard became number one in the bond holdings, and now PIMCO is maybe number two. It's just amazing. The guy didn't have a good track record whatsoever, especially in the last 3-4 years. Just says a lot for the confidence in that one individual, doesn't it? Amazing. All right. This is something we've also been talking about, just to cover a couple of the things that have been on my radar screen. We're looking at November beans. We had that pullback we were looking for, but we didn't hold below the 942.5 levels on November beans. I'm still bearish on this, still looking for reasons to short it. Had the close below and the ramp back up. We talked about targets down below of 942.5, and we had the close below there, and that was not cool that we rallied back up there yesterday that quickly. That was a stop out for me. So again, still trying to play the game. 942.5, shorting below. If you've been listening to the show, you know we've been talking about trading beans down into 850, maybe even so, and maybe even lower. So still trying to stay on that. Corn, we've been talking about this getting below $4 and then possibly going down to the 350 range. Also, this is the situation on December corn. We talked about getting below 383 or selling 390. Now we've had that happen, and there's really nothing down below here to pay attention to. Here's the weekly on December corn. Nothing in the way there. All right, let's take a look at a couple of stocks that have had some earnings. This is one that we talked about a lot here, Anadarko, APC. Strong, strong, strong. Pre-market will trade 94.50. So here's the weekly. Not a lot of reasons to short this. Here's the 240s kind of regulating this trade up. Let's see if we got the right. Okay. Here's another one that's, here we go. Dominion D, 7158. And I apologize for my voice today, guys. I'm stuttering at the same time. 7158, unfair lows on the daily. Not the strongest stock in the world, but here's the weekly situation. All bets are off below 69.41 on this particular stock. We're going to be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they just recently unveiled the new 5-year market-safe future economy CD. This is a CD that could really deliver, but you only have until May 7th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all the upside. And should they lose, no worries. There's zero downside risk here, as you still get back 100% of your deposited principal. Intrigued yet? The May 7th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. We're going to take a look at gold really quick. We talked about maybe taking a break from this on the long side all of a sudden, and all of a sudden, I think since we started this show, we've rallied like $7. So again, here's the situation on gold on the daily. This all happened since last time we took a break, actually. 1183, those unfair lows, they closed below, went back and retested, and now we're getting it back right smack dab in the middle of the fair auction. So here's the 240s on gold. We were hoping we could get back down below 1184, 1183, and we're just kind of running away from there now. So now we're just going to, we just don't have any leverage up here on the short side or the long side. So that's the way we're looking at gold. And a little bit concerning. Here we go. Let's take a look at the scanner really quick. This is our daily view on our major ETFs here, and as you can see, a lot of them have gone positive. Last week, we're looking at some of these negative, and the ones that are negative are really not that negative. So here's a 4-hour view. All of them are green. This heat map gives you basically 240-minute views on the internals, what those components are doing. We see some pretty strong situations here. But as we go into the S&Ps themselves, let's take a look at the S&Ps here. And we're ranking this on the daily. So let's just look at this. Let's drill down into it. As we can see here, we pull up our daily breadth chart. We're going to go into this, and I'm pretty sure you can't get this information from anyone else. We're going to blow this up a little bit. And, as we look at this, it's been, let's take the middle ground out of play for just a second, okay? Let's just get the middle ground out of play. As you look at this, it's been extremely non-directional, kind of hovering negative, hovering positive since back in, what is this, 1st of April. It really started just kind of crunching. And if we put our long-term or our middle ground view in there, we've had a pretty good balanced market and really not a lot of direction. So as we look at, on an intermediate basis, as we look at these S&Ps, I'm going to pull these up. And this is our daily view. And this is April 1st. We've climbed higher, but we tried to opt out on some of the, the big time long pushes here because we just haven't had a lot of direction as far as the internals go. Some of the leaders have outperformed without question, but a lot of the pack has not really cooperated that well. And if you look at what's happened on the global scene and you look at what's happening in the scanner here, let me just pull this up here on the global chart. And we're looking at the globals here. This is our weekly view, excuse me. A lot of these have ramped up, and as you look at the S&Ps, we just started turning back positive again. It's not been the strongest index. So, as we look at this as a long play and maybe the flavor of the day for indices trading, it's just not been in there. So I'm still looking at this, trying to find situations to trade this from the short side. And the next breaking point we could have is getting below 2100 again. So rallies in the 2113 or getting below 2103 are going to lend some credence to possibly trading this from the short side. But until then, you don't have a lot to hang on to up here. So that's the situation on the S&Ps, and that's referencing our heat maps on our new scanner that I think TFNN will have this week. So that's the way that works. Let's take a look at IBM. I read something that somebody's saying this is now a better trade than Apple from the long side. I don't know if I'd go that far. We've talked about waiting until we got 175.13 for the short opportunity on this. That happened yesterday. We key reversed off of it. I still love this as a short. And yesterday we had that profile appear. I wasn't around. I was hugging in the old bathroom here. But 75.13, we got a price action above there. Now we close below. Now I hope we get a retest of 175.13, and we could drift 6 points down easily down into 169.01 on IBM. So keep your eye on this stock. That's the way I'm looking at IBM. Let's take a look at the weekly here. Again, this is kind of a retracement trade. And I think we've hit some intermediate targets on IBM so far. So that's the way I'm looking at IBM. Let's take a look at INDN. I can't ever say this. Vincent. I can't say it. Some earnings out on this. Let's take a look at, here we go. It's a $15 stock, and remember, $15 stocks can be shorted. We're trading $14.87 pre-market. So as we're looking at this, I think we're trading pre-market board. Yeah, $14.87. So this is why we don't trade stocks before earnings. So now we've got 15.05 as a leverage point on the short side for and Vincent's. Wasn't that a group in Evanescence? Gotcha. Okay. So 15.05 is the unfair lows. That's what we're looking to leverage off of on the short side. Kind of showed its hand, a weak stock in a strong market. This is the kind of things you look for. All right, let's take a look at EOG. This is another earnings-related situation, trying to figure out how to trade this thing. Here's our weekly on EOG. My charts are a little slow, guys. Apologize for that. It's a $100 stock. Remember, we've kind of gotten into the 100 level, and remember, stocks a lot of times will reach 100 from a psychological standpoint and then back off. So we reached it last week, we backed off. We reached it again this week. We're trading literally right at 100 right now. So here's the inflection points to pay attention to. We got a new profile. We have to explore this all the way down to 97.44. That's going to be something that if you're going to day trade this, try to leverage off 100. I think you've got targets down below at 97.44. This is a weird play. It's not, a long-term investment situation that I'm talking about. I'm just trying to talk about trading around that 100 level and what your targets may be trading a stock like this around 100, and especially after we've had some earnings news that's come out. Let's look at CMCSA. I think everybody knows this, Comcast. All right, so pre-market, it looks like 58.59. I think that's a real print, 58.59. Here's the weekly on this. And here's the daily. Kind of some wild action, but again, you're in the middle on the balanced area on the dailies. I know we're trading 58.59 pre-market. Not a big reaction. And somebody was sending me a couple of emails with this. I just don't see any leverage here to try to take a big stance on Comcast right now. So I'll probably pass on that. We're going to take a look at Apple. Okay, so kind of a key reversal here last week, and Monday I didn't get to talk about this that much. So as we opened up last week and kind of ramped up and then closed below, this is some serious action on Apple last week. We've come back this week and already retested that big Maginot line up top around 130.76. So what do you do with this now? Let's take a look at the dailies. I'm still not a big fan of shorting Apple. So again, I think you still got to take the shots on buying support. So 127.04 is now your support area, and then buying breakouts above that 130.76 area. I still think you got to stay with the turn to rinse the same way type situation on Apple, even though we did a key reversal off those weekly unfair highs and kind of caught some people with the shorts down on the breakout. You look at this long term and you kind of still notice that we're compressing up into these unfair highs, and there's not a lot to get too terrified about with Apple right now. It's an enormous cash cow. Taking fundamentals out of it totally, I still like the technicals on Apple right now. Let's take a look at Netflix. Okay, this is something Joey was talking about actually before this spike up when he was on the show recently. You still got 537.58 down below as support on this. I mean, this is something that I think caught the shorts red-handed, and I think they're not all out of it, believably so. And this is one that we're going to just keep on our radar screen. And if we get down into this 537.58, we're going to have to look at this as a buying opportunity on Netflix. This is not the type of action you want to see from the short side. Pre-market, we're trading 567.67. So that's the situation on Netflix. Let's take a look at Tesla. As we wait for this to populate. Okay, so here's the weekly situation. We had talked about getting breakouts above 210.84. That happened on a weekly. We haven't looked back, so what do you do with it now? Here's the daily situation. We're continuing to stay above these daily profiles. Not a lot of conflicting information down below in our navigator with this. So intermediate support at 224.79 still. I know we had a kind of a volatile day day before yesterday on Friday. Get this out of my way. And, that's where I'm putting my stops below 225 in the interim on Tesla. Let's take a look at the XLF. This is something I was hoping and looking at with bearish eyes for a long time, and now we're back above the kind of the last area of resistance here for me, 24.50. We're trading a little bit higher than that. We kind of crossed the daily for highs, the weekly for daily for lows and the weekly for highs. And I'm not going to just say, hang on to this, wait for the next level, see if that aspirates. That's not what trading's about. You got to take your medicine. And on the XLF, I think we're at a point right now where you need to possibly sit tight and now have to wait if we're going to get any more inflection points up top or start crossing some of those borders from below on the XLF. We're going to take a look at the XLE. With crude oil doing what it's doing, obviously it's outperformed the XLE lately, but this has been, pre-market, we're trading 83.18. So we're back up top here. This is our weekly situation. It's been a pretty easy trade for the most part relative to crude oil. We've been doing this relative strength trading situation. Crude oil makes lower lows, XLE makes higher lows, and now we're just kind of churning above this 80 area on the weeklies, and then we've also got this 80-87 area on the dailies. So again, nothing to really key off of here on the short side. On the long side, as long as we're above those weekly and daily profiles, we have to look at the 240s. So again, 81.80 short-term support on XLE, 81 the intermediate, and 80 that long-term support. Okay, we're going to take a look at ExxonMobil. This is one that, we stayed away from on the long side because looking at our weekly, we had just literally underperformed even crude oil on the way down. And we talked about this kind of whoosh sound that might happen once we get those below those weekly unfair lows, 86.95. And now on the weekly, we're kind of getting back up into maximum resistance here on the weeklies. This is why I'm pulling this up. 90.22. We've reached a high this week already of 89.88. So we're we're about a quarter point from those weekly unfair highs. And if you look back at Exxon, it's obviously underperforming a lot of other XLE stocks, and the XLE itself. It's also underperforming crude oil in general. And as we look at this, this is something in my mind that I'm looking at as a shorting opportunity on the XOM, at least in the short run. So pre-market, we're trading 89.70. Again, 90.22 is going to be that big area to look at. You're in the neighborhood right now. And yesterday's action, kind of a reversal looking little situation there. And XOM, you might find better long opportunities in the oil sector. And definitely, if you're looking for shorts, in my opinion, this may be a great candidate. Guys, we've got a couple seconds before we go to break. When we come back, we're going to do a little bit of recapping on some of the indices, some of the stocks in play today. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Do you know the 7 most critical factors that influence every decision you make, and how not knowing these will jeopardize the health, the wealth, and the relationships you deserve? I'm Steve Rhodes, morning host at TFNN.com, and for the last quarter of a century, I've studied and used the secrets of human growth, the same formulas used by leaders of nations, billionaires and millionaires, and the most successful athletes on the planet. Would you like to break through any obstacle that gets in between you and the success you deserve? Would you like to turn fear into strength? If you could find a way to achieve, be fulfilled, and live a life of meaning, wouldn't you want to know the answer? I'll teach you the factors that control your state of mind and the drivers that impact every thought, emotion, behavior, and action we take in my new webinar, The Psychology of Trading. Join me for this 2-part online event where I'll unveil the secrets to human pattern recognition, because they're not what you think. And soon, you'll have the health, the wealth, and the relationships you deserve. Just go to the homepage of TFNN.com and click on The Psychology of Trading to begin your journey now.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
We okay? Okay, great. Sorry about that, guys. All right, so let's take a look at some recap here. Where are we at? Where are we at? Here we go. S&Ps. Now we're getting below 2103. So again, this is, pre-market. We're going to have some noise. 2103, again, these 240s showing a hint of starting to be able to break down here. So that's going to be the leverage point here. I know we've come off quite a bit since last night. But again, that's going to be the inflection point to pay attention to on the short side for right now. I'm not a big fan of going along these S&P futures right now or the NASDAQ. Let's take a look at the NASDAQ. And here we go. We're going to get this popped up here. And we talked about 4462, 4463. That seemingly happened already pre-market. Here we go. There's the inflection point we were paying attention to, and we were kind of rattling around above there. Now I think you got a better inflection point on the NASDAQ to pay attention to on the short side. Again, 44.63 with stops above on the NASDAQ. You got initial targets of 44.39 on the NASDAQ trade. Let's take a look at the, excuse me, I want to pull up the dollar here. All right, so we talked about not being too bullish on the dollar right now and doing a sympathetic bounce here. So this is what's happened on the dollar. That inflection point at 96.14, we've done as high as, let's see if I can read my own terminal here. Been as high as 96.10. That inflection point, 96.14, going to call that satisfied. Remember, that profile appeared above price action. That's relatively bearish. And now we're getting below those weekly unfair lows again, or right at those weekly unfair lows, and looking very heavy on the dollar. So keep that in mind. Remember, the yen's going to act somewhat accordingly. It's a relative strength trade to some degree. We're going to have to take a look at gold reacting to this dollar. Coming off. Continuing by default to edge a little bit higher, but not extremely excited about this. You'd think with the dollar on the cliff there again, gold will be a little bit more excited than it is right now. So just watch out for that gold trade trapping you into along there above that 1183 area. I haven't been bearish on gold. I'm just saying it might not be the breakout time. Let's take a look at the euro. We didn't cover that earlier. We talked about 110.5, 111 on the euro. Here's the long term. This is our kind of resistance areas. We closed above, and then we talked about all bets are off for a while. We got above the 111 area. So right now we're just kind of consolidating within the balanced area. And let's just take a look at this on a shorter term scale. Here we go. Profile appearing below on the euro. So that's a bullet sign in itself. And watch out for the euro to actually go higher now. And always look at the dollar for this type of trade. So, guys, we'll be back again tomorrow. Steve Rhodes is next. Hang around.
Basil Chapman has just announced 2 live workshops that he'll be hosting April 28th and May 5th that only subscribers to his opening call will gain access to. On April 28th, Basil will host a 45-minute live online workshop, The Essentials of the Chapman Wave, where he'll teach the basics of the Chapman Wave notation that Basil created and uses daily in his trading and newsletter recommendations. On May 5th, Basil will host a second 45-minute workshop where this time he'll revisit the 1929 market comparison webinar and provide his attendees with an updated take on the socio-economic trends Basil has spotted currently taking place. If you're an opening call subscriber already, then your seat is already reserved. If not, then sign up for a 30-day free trial to the opening call today. You get a month of Basil's daily newsletter, The Opening Call, along with 2 live workshops coming up. Don't miss out on this offer. Sign up for Basil Chapman's opening call newsletter today on the front page of TFNN.com.
This is TFNN.